What's up, guys? Welcome back to DCA. So today what we're going to do is take a look at where Ethereum's price may stabilize during this market crash that we're witnessing right now. So currently, Ethereum is trading right at around $3,190. So over the last 2 months, and after reaching our peak right at around $4,900, Ethereum has come down 37%. Okay. So a 37% drop isn't necessarily something new to Ethereum. We've seen moves like this before, even during moves that we've recovered from. What's a little bit different though is the fact that, and as we've mentioned many times on this channel, and I just keep reiterating this because of the fact that, I truly think it's that important. This 50-week moving average, previously we talked about the 20-week moving average. Well, we've dropped below that quite a while ago now. So we're looking at the 50-week moving average. In the past, when we have dropped below the 50-week moving average, it has typically indicated that Bitcoin needs typically 6 months or more to recover. Now, typically, what happens after Bitcoin drops below its 50-week moving average is it trends down to its 200-week moving average. You can see here in 2014, we fell below and then went down 4 months. Okay, we in fact didn't get back to our prior all-time high from December 13th all the way out basically until 2017. And then the same thing here. In 2018, we fell below, went down to the 200-week moving average, didn't get back to our all-time high from December 2017 all the way out until December of 2020. So for 3 years, we didn't get back to our all-time high. And this is what we kind of have been preaching on this channel since the beginning. When Bitcoin falls below its 20-week moving average, that's a bearish sign. Then once it falls below its 50-week moving average, that's an extremely bearish sign. The reason that I, bring this up is for two reasons. First, we're going to, like I said, we're going to look at Ethereum and try and identify where the cycle or where the asset may be able to reach an equilibrium point, at least in the short to midterm. But, we've been saying on this channel, since I've been making videos, you need to think about how your portfolio is constructed when you drop below, or when Bitcoin starts to show bearish signs. So that being below the 20-week moving average and below the 50-week moving average, because of the fact that in the past, when they go below those levels, they typically keep going down, and they go down over a long period of time. And as Bitcoin goes down, the altcoins get absolutely hammered. Okay, it doesn't always happen right away. The altcoins usually lag behind. In fact, if you remember, Bitcoin peaked back here in December of 2017, whereas most of the altcoins peaked at some point in January, or some of them even February. Same thing here. Bitcoin peaked in April in our first market cycle. Then you saw your altcoins all going crazy, even a lot of them, while Bitcoin took this massive drop down, going from, its high of right around $60,000 to its close at $46,000 and a low of $44,000 basically. And you had a lot of altcoins peaking right here. And then, as we've been seeing this move down, we've been seeing a lot of altcoins in the last few weeks making new peaks while Bitcoin is showing weakness. And so this isn't a revelation. This happens every time we've seen Bitcoin show these massively bearish signs. So I think at minimum, we need to consider this could be the start of a bear market. If you're not considering it, I'll just say this: you're being naive. You're being naive. I'm not saying it has to happen. I'm saying you need to prepare yourself, A, mentally, and B, take a look at your portfolio. What is it composed of? What are the assets contained in your portfolio? And if you're holding simply altcoins and a lot of obscure altcoins, I'll just tell you this, I'll say it matter of fact, you're going to get hammered if we start to go into a bear market. And if you just hold those, many of those altcoins may never recover. It's not to say all of them won't. And it's, not to say that this bear market will necessarily play out like all other bear markets have. However, I do suspect that we haven't reached this point of decoupling yet, to the point where, if Bitcoin goes down 75%, your altcoins are going to be fine and trading at new all-time highs. I'm severely skeptical that that is even a possibility. Okay, guys, so for Ethereum today, the way we're going to do the analysis is by using the volume profile visible range. And if you don't know what this is, it's actually a very simple tool. All right, so if we just zoom out here a bit, it shows you where have basically at every given price range. So if you look on the right, you'll notice that as I'm moving down into different prices, it's showing you how much volume has been traded at that level. Okay, so you'll notice that it's comprised of these various bars. Each bar represents a level of volume. And as the bars stick out further, let's say, this indicates that there is significantly more volume here than, for instance, at this level. So at $2,965, basically in this range here where you're seeing this gap, there is very little volume that has been traded. Whereas compared to this level here, there is a significant quantity of volume. The reason volume matters: if you have, for instance, a large number of holders, let's say at $1,800, and remember, the farther this sticks out, the more individuals hold at that price, it's going to be harder to shake out a larger number of people. Whereas when you're at these smaller ranges, not many people hold at that level. So the market can simply pummel right through, those various price levels. So the areas where you don't have a lot of volume, for instance, right here between $2,800 up to $3,100, that's called a low volume node. Any of these gaps that you're seeing are called low volume nodes. Any of these regions where the bar sticks out farther, that is a high volume node, indicating statistically that there are a larger number of holders there, and therefore it will be statistically more difficult to move the price through that level. In other words, it is by definition a level of support or resistance. So we're just going to bring this out and we're going to look at basically a price range extending down to somewhere around where the prior all-time high is. Right now, we are sitting at basically this high volume node right here at around $3,200. But you'll note that there is a gap here sitting basically right below $3,000. We have this low volume node here sitting between $3,100 all the way down to around $2,800. So I suspect that if we lose $3,100, you're going to see us rapidly drop down to $2,800. And from there, fortunately for Ethereum, we do have a fair bit of volume all below $2,800. So we're looking, basically in this region here. So from 28 all the way down to around $1,800. And you'll notice that right here, we have a very large high volume node right at $1,800. And that's because this level was used as a level of support multiple times in this bull run. So, we formed a lot of volume right here, then right here. Then we held this level as support during the crash in May. So that particular level at $1,800, in my opinion, is going to be hard to break. And I know, I get it. No one wants to hear this. And, I don't like telling you this, but at the end of the day, there's plenty of channels that won't tell you this. And if you want to live in a world where you only reaffirm the opinions that you already have, then that's fine. There's lots of channels, in fact, the vast majority of them, that will do that for you. And just for reference, because I've been asked this in the past, this is the last thing I want to show. Prior to the crash, people have asked me, well, was there a support level there prior to the crash? So does this hold up if you sort of back test it? And this is prior to the crash, the May crash. And you'll notice, where is your high volume node, your first high volume node? First of all, you have almost no volume from $1,900 all the way up to $4,000. So where's your high volume node? And of course, it's right where we held our support. And then if we just play it out, you'll see the support level forms right at this high volume node. So now, we're not looking at anything in the future right now. This is only showing you the part of the screen that I'm showing you. So it's only showing you the data through May. And this is your high volume node. Here is your next one. So $1,800 and down to between $1,300 all the way down to $1,200. So in May, if you were watching this, you could have suspected that if we crash, this is where we'll crash to, because this is where all the volume is. And that's exactly how it played out. You see, we crash right down to the high volume node at $1,800. I'm just holding it here for you, this level. Notice we're right down to $1,800, $1,800. And now where are we? We're at our new high volume node. So the bottom line is 3,100. If we're going to get a reversal to the way back up, this would be a good candidate where we're at right now. But if we drop there, then you're certainly looking at a position where your next levels are going to be down in the mid 2000s and then back down to perhaps $1,800, which we've held many times in the past. All right, guys. So if you like this type of content, hit like and subscribe. You could also head over to the Discord channel. We do a lot of discussion there regarding analytics about the cryptocurrency asset class. You could also follow me on Twitter. And until next time, as usual, see you.